All right, I'm Eversley, and today the topic is going to be the benefits of swing trading versus day trading. And just to make sure everyone can hear me now, right? Just say yes, so no, I'm all good here, and then we'll get going. Okay, cool. All right, so I've always had the people have always talked to me, and everyone starts out day trading because that's what everyone does. Myself, Becky, who's the co-host and my trading partner, we all started out day trading, but as we kept evolving and meeting different people in the business, um, even the people who were teaching you to day trade didn't actually day trade themselves. And we found that out because we used to travel to the Traders Expo in Las Vegas and other conventions, trading conventions. And we talked and met in person with the people who are running all these trading classes online and trading programs, so on and so forth. And I usually just straight up ask them, never, not during their presentation, but off to the side in the hallway, during a break. Do you actually day trade the stuff that you are showing us? And the answer is almost every single time was no. That's how they started, but this is what people wanted to pay for to learn. So that's why they were showing them, but don't actually do it anymore. They evolved to swing trading. And that question still comes up with day trading versus swing trading. So that's why this is the first time I'm doing this topic today to go over that and show you some of the pros and cons of each and why we do what we do, how we do it, and which is swing trading. Right. So everything we're doing today is for educational purposes only. We're not giving any specific trading advice. So be aware of that. But this is showing you how myself and Becky, how we profit from the markets. Some of the people on in this meetup also have been coaching clients and they've been doing this type of trading for a while also. So um, little things will trigger things in your mind you might have forgotten or ask questions also and clarify things. I know we have a lot of volatility in the market right now, so that is something I actually want to look at first and foremost, the big picture, because people I have clients who are freaking out. The market's going to go down forever. Everything is, that type of stuff. So I'm going to before we get on to the future, let's take a big picture look at the markets. And then we did a real detailed review last time of the big picture view, and the link is in the meetup chat window. If you haven't seen that recording, it's the options meetup record says high probability option swing trading, long and short using our best strategies. So we go over that and in in more detail. So I'm going to switch to share to the chart and then take a look at what's happening in the big picture market right now. I'm changing to share. Okay, so what you should be seeing right now is a monthly chart of the S&P 500. This is each candle is 1 month of time. When we look at the more you pull back on with bigger time frames, the clearer things become. When you're looking at stuff intraday, daily, so on and so forth, the lower the time frame you get, the more noise, the more everything is all over the place. Okay, but as you pull back and back, um, you start to see, oh, this is, that's, it becomes so much clearer and you don't freak out when you hear the news and everything's going on in the news. You don't freak out because of that because you understand the big picture. So that's why I like to show this for my coaching clients so that they can be at ease when they think bad things are happening, but bad things happening create opportunities for us. All right. So what we're looking at here is a monthly chart of S&P. The blue line is a 40 period moving average, and this is an 8 period moving average. Okay, and those are exponential moving average, 8 and 20. Let's give me 8 and make sure I'm getting the right value so you can set it up yourself. 8 and 40. Yep, 40 period moving average and 8 period moving average. And that's on a monthly chart. And you can set this up yourself and look at it, the big picture. It works extremely well on the S&P, Dow, and NASDAQ. So what we're looking at now is S&P. Here we are. This is 1999. This is an 8 period moving average. When price is above the 8 period moving average, every pullback to the 8 we look for on the daily charts for buying opportunity. We do not, and if you're a longer term investor or medium term investor, you are looking to buy when it pulls back to the 8 or it pulls back to the 40. Okay, that's when you're looking for a buying opportunity. And so you're above the 8, pullback is a buying opportunity, and you have multiple buying opportunities. Every pullback is not an exact number. It's just if you're a long-term person, you start establishing positions anywhere as it pulls back, anywhere as it pulls back, anywhere as it pulls back, anywhere as it pulls back. But with our strategies, we have on the daily charts buy signals. So when we see it pulling back, we wait for a buy signal on the daily chart, the lower time frame to happen. Then we get in. We just don't catch this massive falling knife as they would call it. And it's a massive falling knife sometimes, but you don't just catch it. You wait for a buy signal on the lower time frame. So our strategies that we present produce those buy and sell signals. So we wait for our buy and sell signals on the lower time frames and then time it with what's happening in the bigger picture. Because we could be getting sell signals all here, sell signals all here, and there might be good trades, but as it retraces back up, so when we're above the 8, we have buy signal. When we're below the 8, every retrace back up is a potential sell, potential sell, potential sell. Every retrace up, sell. And like I said, these are big money moves when we're looking at the monthly charts and then doing it either with shares or with options. Right. So this was the crash in 2001 and the rally back up. Here we are in 2004 with the 8 above the 40. This is considered bullish. This is considered bearish. Once the price is above the 8, every pullback is a buying up. Every pullback's a buying opportunity. Every pullback's a buying opportunity. During this time, you might be hear bad news on the radio, on some podcast, on some streaming something service, some news. Don't listen to news and make decisions based on news. Look at the charts. Every pullback, buying opportunity. Okay. Once the price had 2 consecutive closes below the 8, we're looking at bearish moves now. 2 consecutive monthly closes. Every retrace back up. This was the 2008 market crash where the market dropped 50%. Biggest market decline like ever. All right. So there wasn't even much of a retrace. Maybe once there's one retrace back up, a second one, then boom, down. All right. We had one more quick one here, but right now we went back above the 8 above the 40. Every pullback is a buying opportunity. Every pullback to the uptrending 40 is for the long-term investors. The long-term investors have to set up their positions around the uptrending 40. That is the real long-term investors. You keep your powder dry and you save your money. This happens every so many months, maybe 18 to 24 months is a major pullback. Sometimes it's when a stretch. But in the shorter medium term, every pullback to the 8 buying opportunity. This can be done with options. This can be done with shares, not futures. Okay. Major buying opportunity with pullbacks to the uptrending 40. And then once again, we go back to writing the 8. This is the monthly charts now. This is why this is so much clearer on a monthly chart because it keeps you grounded. Here we are in 2018. We pull back, buy major investors, long-term people. Here's where you buy anywhere as it's pulling back. You might even start scaling in. You put a partial position on here, partial position on here. It went below for a little bit, partial position, boom, and take profit along the way. And then same thing here. This was COVID. The market pulled back for a whole 3 weeks. This is literally 3 weeks worth of time. It pulled back, then took off. Great opportunity for the long-term investors. They went down below to scare you a little bit, but then boom, right back up above the 8, pulling back. Like I said, I went in much more detail on this in the last meetup. And pull back. And when this is pulling back, you'll hear in the news, oh, the market's in a recession. The market's this. The market's dropped 10%. We're in a bearish market. This goes from 470 down to 250, 350 something. Okay, so more than 10% about a 20 something percent pullback, normal pullbacks. Don't get freaked out. And the daily chart, there's lots of noise, but in the bigger picture, pretty straightforward. I did a meetup where this was a red candle going down to here, and I told look for another 10% drop. It dropped 10% almost exactly and then took off. Here we are right now. The last meetup we did was a couple of weeks ago, and this red candle was sitting right up here on top of the 8. And I said, we're looking for buying opportunity, but we have to wait for the buy signal. We have not had any buy signal. We've had lots of sell signals. So we might have some long positions on, but you don't just go in blindly. You wait for the buy signal. Now, in an ideal world, this pulls back about 10 more percent S&P. So that would go from about what 630. This is going up 630 to 580. So another whatever percentage that is of a pullback. And this is going to be our next long-term buying opportunity for the investors. Obviously, there's market moving events going on overseas, and it's going to create some volatility and push markets lower right now. But pushing markets lower isn't a bad thing. It just creates opportunities for us that we wait to capitalize on. And suddenly, it's somehow, some way, this is all going to be timed with the end of that event happening overseas. Okay, it'll somehow this will all be timed out. So this will shoot down, and this is going up, the moving average, and they're going to meet in the middle somewhere, and boom, take off. But don't get freaked out because this market keeps dropping. It might drop another 8 to 10% before we see that big buying opportunity. Okay, but people tend to think it's going to go down forever and ever and ever and ever. Okay, um, so don't get too freaked out. But we got to wait for the buy signal. You don't just jump in long. Right now, we have sell signals. We've had sell signals, and if it gets a retrace back up on a daily chart and then shoot back down, we'll find more buy sell signals. But this is what it looks like right now, and more than likely, and this is something that we don't teach, but I'll just show you. Good old Fibonacci level. Boom. Put that there, and that's the high. We're looking for from the last swing low. This is a monthly chart now. From the last swing low, a 50 to 61% retrace puts us in this range right here. Okay. And as this market drops, this moving average is going to be going up into this range, and this price will be coming down into this range, and they're going to meet. And it's a perfect setup that this is what's expected to happen. Fibonacci is awesome like that. Okay, they're going to meet. This is where we can start setting up. If you're a long-term person, you start setting up longer-term plays. But you got to do it a certain way to take profit and have a stop loss, which is usually have a couple of monthly closes below the moving average. So you have to really plan that out. Anyway, that's what we're looking for right now as far as the big picture markets. And on the daily charts, we have short signals going on right now. And when we get the buys, great. But right now, we're just seeing a lot of sell signals. That doesn't mean just overcommit to the short side. Okay. Longs are still in play also. We're also getting some buy signals, just a matter of not yet. Okay. All right. So I'm going to switch back to the presentation now. Like I said, any questions, type it in because I'm not getting any audio. So go ahead and type it in, any questions you have, and we'll address it, or someone else might even address it if it's something that's one of their specialties. All right. So let me change the share and I'll go back to the handout. And in case anyone didn't get it, I'll put the link back again. In the chat window, there's the link for the handouts and plus a link to a couple of recordings. The detail will be just talked about a little bit more in the last meetup and plus another previous futures presentation. All right, so let's scroll down a little bit now. And these are the markets we trade with futures. ES, the S&P, NASDAQ, Russell, and the Dow, and the currency futures, Australian dollar, British pound, Canadian dollar, euro, and Swiss franc. And we do trade these. One big reason is because they all have micro futures available. Otherwise, you would need 20 something thousand dollars in margin just to open one NASDAQ contract. That's just to open a contract. But with the micro, you just need 1/10 the amount of for margin. So you need a lot less capital. And Australian dollar, you need about 200 something dollars in margin to open one micro contract, maybe 2,000 in margin to open a full size contract. And you can actually trade much smaller size positions and build up your confidence and skills with the microcurrency futures. So I have a lot of people who really specialize in the currencies because they give us absolutely the best results of everything we do. The currency futures gives us the best, the best results, the hands down best results. And we have the ability to control risk by with a good old-fashioned stop loss. It works really well in futures. There isn't very much slippage, and we get very set, and we can determine risk reward and plan out our trades very well, and doesn't take a whole lot of time. So that's why I really like trading futures. And now we're going to go into just a little bit of the benefits of swing trading versus day trading. And what I mean by swing trading on daily charts. The last time I looked at an intraday chart on a 5 minute time frame or an hour time frame or something, a minute time frame or a tick chart, 233 ticks or 100 tick chart. Last time I did that was 2009. We stopped day trading in 2009. And a big part of that is because we met so many people at the conventions who do not day trade. They shared their real knowledge with us um, about how they trade in real life versus what they present to the public. And it's different. They present to the public what people want to pay for. What they trade in real life is part of their own personal evolution. And so those are the people we learn from, and we learn from them by getting that, by actually seeing them in person and speaking with them and having them guide us and help us. And it was a whole different experience seeing people in person. And so that's the good part of going to some of those things like the Traders Expo. You get to speak with the real people, but if you want to get the real answers, you have to catch them off to the side and know the questions to ask. You have to know the questions to ask to get the right answers, not just what they're presenting. Because quite often what they're presenting is what a sponsor is paying them to present. That's another thing also. So always ask them what they actually trade themselves. Here's the question. What do you actually trade yourself in your own personal accounts? That is the question to ask. And don't ask them during their presentation, ask them off to the side. And almost every time I got honest answers that never, ever matched what they're presenting. Okay, so that's the number one question to ask. And you'll be surprised what people will tell you. All right, so one of the big things is less noise. Myself and Becky, we were day trading, and this key thing here, news spikes. Every morning at 7 a.m., we would see a big spike in the market, boom, because some news event came out. And it was a very repeatable event, but how could it would sometimes it would literally move boom, boom, down. It's that fast. And what we realized is that we were using just a broker's platform to try to trade it, and that was useless. If you want to be a professional and trade like a professional and trade futures day trading, we had to get a professional level platform. That's why we got NinjaTrader. And those are NinjaTrader people we actually met at the Traders Expo. They kept bothering us. It's like, hey, come see our thing, come see our, we don't, and then eventually we went over and saw their platform. It was like, hey, this is actually pretty good. And that was like so long ago now, but we use it almost every single day for analysis. And we use it for day trading. We don't use it for swing trading because it's a day trading platform, but it's great for analysis and it's free. It's free to everyone to use for analysis. So that's why we use it for our charts and analysis. But it fills out a lot of noise. So by going for the daily charts, You don't see all the spikes intraday. Something came out, a report came out, it goes up, down. All that goes away. On the daily chart, all you see are four numbers: an open, high, low, and a close. Anything in the world that impacted anything else in the world that day is contained in four numbers on a daily chart: open, high, low, and close. What happened at 7:05 a.m. or 9:03 a.m. or 1:55 a.m. in the morning for futures in the middle of the night means nothing. That's just noise. That's great for the day traders, not for us. So that's why our evolution is we don't deal with noise. We let's show us the end of the day, everything that's already happened, and we'll either create a buy signal, sell signal, or nothing. Okay. So trends and key levels, support levels are more reliable. You're gonna see like one of our examples, I'm gonna show we capitalize on this big time because we do a lot of trend lines and we establish trades above or below certain levels. And on all our futures trades, we only buy above a certain level or we only short below a certain level. And doing it on the daily charts is a lot more reliable. So high quality setups and fewer false signals. That's the benefit of um, having less noise. Better risk to reward. Swing trades, I know like the S&P, people try to capture a point or two at a time. They got one or more contracts. Micro contracts try to capture a couple of points in S&P. When we're doing an S&P trade, we might be trying to capture 50, 60, 70 points or more for the first target. So we don't need as many contracts, which means we can use a smaller account to catch bigger moves rather than having a bigger account with a bunch of contracts to catch smaller moves. Okay. So that is one of the big benefits. Our swing trades, um, we need fewer wins to offset losses. And we tend to average 80 to 85% winning trades. And given the risk reward we use, as long as we're maintaining that level or even higher, realistically, we trade at 80 to 88% wins. And so long as we're consistent trading, things work and the numbers work out very, very, very nicely for us. I'll check something real quick. All right, good. All right, lower time commitment. This was a huge one for us. When we were day trading, we'd be sitting in front of a computer for a couple hours, and then we have to go to work. And then, but our positions are still on, and we're in the trades, and we just can't leave. Um, and there's one such scenario in particular that someone contacted me to for get me as a coaching client because they described a situation to me that they experienced where they were day trading and they were fairly confident in what they were doing. It was for futures, and they just had funded their account and everything was beautiful. Everything was okay, okay. And they're sitting there doing trading and they fell asleep. They fell asleep. And when they woke up, their account was gone because during that moment they fell asleep. The market took a big move against the position they were in. They weren't using stop losses. They were just doing stuff live. And so nothing we do, everything we do has a stop loss. Everything we do has a stop loss and a profit objective. When you place a trade, there's a bracket order, entry, target, stop loss, every single trade. Um, and but the reality is with day trading on the lower time frames, you have to be sitting in front of a screen all day or whatever hours you do it. And people don't always have the time to do that. With the swing trading, we can analyze markets once a day after the close. I usually put out that it takes 30 to 45 minutes to do that. For me, it takes me literally 5 to 10 minutes because I know exactly what I'm looking for. And as an example, if there are no up if let's say I'm looking at the currency futures and they're all down days, then I have no valid buy signals. I don't even have to look for the long strategy. If they're all up days, I have no short strategies valid. because for the market, for us to get a valid long signal, it has to be an up day. If for us to get a valid short signal, it has to be a down day. So right away, I cut out half my work I have to do if I know um, all the currencies are either long or short. Same thing with indices. If the indices are all finished up for the day, I have no short signals valid. Done. It just goes really fast. It's just a routine and it's very visual. If you have a job or life, there was one person that I actually spoke with, and it was actually a coaching client. And because of family things, um, they were doing their day trading in the morning, but they were not it would be disturbing other family members who want to sleep if they got up early and started doing all of this, and it threw their whole plans off. It literally it sounds kind of interesting, but it threw their whole ability off to trade. And if anything is disturbing you mentally, emotionally when you're day trading, you can't do it. You have to be so focused. And so this is a big part of swing trading. It has to be less consuming in your life and time. It has to fit into your lifestyle. So how we swing trade, nothing is done until after 2 p.m. Pacific time, 5 p.m. Eastern time, because we wait for the futures markets to close. And after that, we go to the daily charts, end of day data, and we look for our trade signals long or short. And our trading plan shows the win-loss percentages, historical P&L, meaning how many dollars made to how many dollars lost over time if risking so much dollars per trade. So it's just a lot less time consuming rather than sitting there all day trying to look for, because you might have 3 hours in between trade signals or 40 minutes in between trades, and you're just sitting there waiting. And then you walk away for a minute and you miss it. So it's okay. So this is a big one here. And this is also an example of how people who are the bosses don't sit there at a desk all day. Um, they've evolved to maybe when they started, they're doing all the grunt work, and the day trading is the grunt work. Does it work? It can, but it's grunt work. You got to be there every minute doing the work. But as time goes on, as you become higher up in a business of management, you don't do that grunt work anymore. And the day trading is the grunt work. And we also found that the same amount of money you could make or lose day trading, spending there 2, 3, 4 hours a day or more, is exactly the same amount of money you can make or lose swing trading for a few minutes a day. It's just fewer. It's instead of having many trades intraday, you can have 1 or 2 trades on a daily chart with a much bigger profit objective. So it works the same way, but it really has a positive impact on your life to free up time. Time is key, especially around the Bay Area where we live here in Santa Clara. Reduce transaction costs. Futures contracts are not free. You get charged per contract. If you're day trading and you put in place a lot of trades, every contract in and out is in and out, in and out, and fees. Um, and you don't have that with if you're swing trading. It's a lot less trades. Okay, and it's just you save those fees add up, and I'd rather be giving $20 to myself than giving it to the broker. Okay, and this is one of the big benefits of swing trading. We'll get benefits of day trading too, so I'm not slamming day trading, but it's not for everyone. Day trading forces rapid decisions under stress. Some people think they can handle this, and realistically, they can't. It is a high pressure activity. You have to be right. You have to be able to analyze and make decisions. Boom. You don't have time to go and read. You have to know what you're doing. Okay. Swing trading gives you more time to plan your trades out very comfortably. That's why I said a 30, 45 minutes a day to review everything. Something's valid, you place your trade. For new coaching clients, you contact me to have to look over order form, make sure it's okay, because that's what I do with new people. I go over their order forms with them. I'll handhold them and everything to make sure it's right. Futures, you don't want a futures trade to go wrong, especially just a mistake, a typo or something, because futures are great, but you got to get it right because they can also be unforgiving. All right. And another reason we trade index futures and currency futures is you can capitalize on these moves that happen regularly and without dealing with the intraday spikes. Okay. Certain moves you might see the moment it triggered at a certain time of day, something came out and triggered the move, but that continues on, and it'll be reflected in daily charts where we get our signals, and you can continue it from there rather than trying to do it intraday. And doing the index and currency futures are really, really effective at capitalizing on things you see in the news, but you don't react to the news, you react to your trade signals. Okay. And this was a huge one that we learned along the way also. Intraday volatility and false breakouts and markets that reverse quick, like the one I mentioned at 7 a.m., where we'd see a big move up and then it would reverse, bam, right back down. Um, our software let us capitalize on that with intraday with NinjaTrader, but most people don't move that fast or react that fast or plan that fast. It took us a while to learn and to how to capitalize on it, but it's not that easy. It can shoot up, boom, and you think it's go long and you'll commit all this stuff to the long and bam, it'll reverse back on you. Okay. And that is professionals on the other side of the trade that can stop you out. But if you, it's frustrating because you think you're right, but what percentage of the time are you actually right? It's harder with day trading. It's really, really hard because it's people, it's a game out there. And it was we, myself and Becky played that game and we got good at it. It was fun, but you got to sit there and you have to learn over time and you have to sit there for hours every day. And we both wanted to have a life and do other things, right? And just to be fair, trade-offs where day trading has an advantage. And it all depends on your goals. Swing trading is not always better. So I know I've met people who work for major financial organizations who can only day trade. They literally cannot be in a position once the market closes in the day. They can't. Day trading gives you more trading opportunities because you're there and whereas a swing trade, you might get has the markets go up and come down. You have to go up and come down. Every up and down creates new sell signals and create new buy signals. But it goes up, down. But it takes days to weeks to cycle through and create new trades on up and downside, on upside and downside. It takes weeks, sometimes months. So there are fewer trades. The same thing can happen in day trading, but it can happen if you're on a 2 minute chart, that can happen every couple times an hour. If you're on a 5 minute chart, could happen every couple hours. Some people trade a 1 hour chart, that could happen a couple times a day. Tick charts can happen anytime. Well, that can be anything with a tick chart, right? Some people cannot handle being in the market overnight because you got to have a stop loss. And some people just don't know how to do that. So they deal with it in real time when the market's open, not overnight, just daytime hours only. And faster feedback loop from improving skills. You get better because you have more opportunities to learn from your mistakes and learn from your success also. And you do have the potential for consistent daily income if highly skilled. To get highly skilled, you might burn through a whole lot of capital to become highly skilled. Okay. Keep that in mind. Highly skilled comes with a cost and time and finding people to coach you how to do it and learning from them. Some of the core differences between swing trading and day trading. The swing trading, You get more quality trades, you got to be patient, and you catch bigger moves. Okay. For day trading intraday, you get more, a higher number of potential trades. It moves fast, and but you need precision. You need a way to capture it when it happens. Boom, boom, boom. In, out, and manage stops. That's why we use our software to do that, NinjaTrader, because it would, once you enter the trade, it would manage. There's nothing for us to do. It will adjust our targets and stop losses for us automatically. And no matter how fast the market's moving, it took care of it for us. We just quick programming, done. But most people don't use software. They just try to manually change things, and it's you just miss so much or take losses without realizing that you need a professional level platform to really capitalize on day trading futures. And who swing trading fits best? If you prefer more time to make educated trading decisions, I prefer more time to make educated trading decisions. The majority of the people I'm coaching fit into this category. Um, they want to spend time to review, to make sure this is right, to make sure all the charts are correct, make sure this, you don't have time to do that in day trading. You boom, boom, boom. You don't have time to look, check a note. You don't have time for that. You gotta have all your stuff ready to go when you're day trading. This gives us a chance to read the plan, make sure all my details are correct. I go through my list, my checklist from the trading plan. Okay, good, 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 good. I have an 88% historical rate of this being a winning trade, and all of, okay, all right. So that is me and most of the people I coach. If you don't want to be sitting in front of a computer all day looking at this stuff, then this is also another benefit of swing trading. What is the best software to day trade options intraday? I would never ever day trade options intraday. Options are not really the thing you day trade because they require big moves to be profitable or time. So we had someone, it was one time when someone did ask that, and there were a lot of professional option traders on the meetup, and it was like, don't, literally every single one of them said, we don't day trade options. Options are not a day trading thing. You need time. And if you're talking day trading, meaning in and out the same day, they're just not made for day trading. They have a spread. They're great for either a couple of days, or they have the weekly options where where you don't look for a directional move, but time decay, but not if you want to day trade. Futures are the best because it moves a point, you make a point worth of profit. It moves against your point, you lose a point worth of profit. And but it's very exact. There is no slippage, there is no decay, there is no volatility. The price is the price. It is what it is. With futures, options are really not a day trading thing. I would never tell anyone to day trade options. Myself and Becky did it when we started because we didn't know any better. But as we went on, we literally couldn't find any of the professional people who were day trading options. There are a lot of individuals who do it because they didn't know it was a bad idea until they lost a bunch of money. Um, but couldn't find any of the, uh, it's, they use it for hedging, but some other things, some spreading, but we're pure directional traders, but not for day trading. Only swing trading. So for our swing trades for options, we're looking for days to weeks to reach a profit objective. So big moves in options is what gives us the most profit, or time decay if you're selling premium, but not for day trading. So I couldn't give you any positive thing on that, any to do that for intraday. Um, and looking at big picture in the indices and the futures, currency futures, they this is what we do. You're going to hear like the FOMC or other big news events, and they generate buy and sell signals on a daily chart. And when you have technical buy or sell signal just happens to line up with fundamental stuff that's going on, those are the best trades. And this is another one here. Over trading and emotional decisions. Some people try to revenge trade. I just took a big loss. I'm going to go the other way now. I'm going to try to make it all back. No, that's how you blow out your account. Um, that's why we do swing trading. Let's follow the plan. Um, and who day trading fits best. This is a key one here that people don't fully appreciate. You can maintain intense focus for hours. You have to know your personality. Um, can you do this? Do you want to do this? Do you have hours? Do you have a life? Do you have a job? Do you have a family? Do you have some places to go? What hours do you want to trade? Trading the first hour of the day is different than trading the last hour of the day. And we're just talking daytime hours is different than trading Forex at 2 a.m. in the morning. It's different than trading at 10 a.m. Eastern time. It's different than trading um, 12 p.m. Eastern time is different than trading 2 p.m. Eastern time. All those different times of day, the markets do not move the same. And it requires different skill sets, different technical ability to spot things. So a lot of people don't realize that they try to trade the same way throughout the day and wonder why they're so inconsistent because myself and Becky, we traded the first hour, the first 90 minutes of the day because that's when we know we have market moving events taking place and we got good at it. We got really good at the first hour because then we got an trader to trade for us. And so that was our time. But eventually we didn't want to get up early anymore to do this. We want to like sleep. And so that's why we evolved from another reason we evolved from day trading to swing trading. Also, margin was an issue. One of the things we used to trade was the Russell day trading, and it was worked great for us. Bam, great. But literally overnight, the margin doubled once. It went from $4,500 per contract to $9,000 per contract overnight. And the next morning, we got up to go trade, and it's like, you don't have enough money in your account. What do you mean we don't have enough money? Um, because it literally doubled the amount of money needed in your account to place the same trades we placed yesterday. Margin increases when volatility increases, and people don't always realize that. So things change. You have fast-paced environments. News comes out, markets move. News comes out again, markets move. It's just example oil last couple of weeks. One piece of news came out, boom, shot up, then came right back down, shot down. We're talking minutes, make the major moves. This was perfect in 2008 when myself and Becky were day trading. We were so into it with fast-paced environments, we didn't even realize, oh, the market is up 800 points. And then literally 2 minutes later, I'm not even joking, 2 minutes later, the market is down 600. It would go from plus 800 to down 600 within minutes. And we didn't even realize until we looked at it later on because we were so focused on getting our buy and sell signals. We didn't even realize this making these big, massive moves intraday. It was a massive volatility. Kind of fun though. But you can't do that all the time, and you have to have a plan. You got to have a plan, execute the plan, or else you're just going to get ripped apart with volatility and moving quickly. And this is the well-tested intraday edge. This is what I'm talking about. You got to have a strategy you're using that you know works for you, that you can implement quickly. And most people just can't do that. And or calculating risk in real time without having to think, without having to, you got to be able to do this so quickly. You have to get the right number of contracts, the right size stop, everything, just everything. And it's hard, and one mistake and you wipe out your account. Swing trading, you have all the time to relax and do this in a very controlled way and a relaxed way. Don't make mistakes. Have me double check everything for you before you even place a trade, and it's good. All right. Bottom line, swing trading daily charts offer higher signal quality, much lower stress, and better time efficiency. For me, my biggest thing is time. I do a lot of different things. I'm a city official in Santa Clara. I'm an actor yesterday. No, Friday, I was acting on a film in San Francisco that's being shot. I work on stunts. I train in Brazilian Jiu-Jitsu, parkour. I do a whole bunch of research studies and specialty things like that. And I try to have time. I need time to do all those things. I teach fitness classes. My specialty is kickboxing. I help out I have literally, I go to many corporate sites to teach and help out some of the fitness centers there. and the different major corporate sites. And so I need time for everything. I don't do any one thing full time anymore. I left my full-time job in 2009, and it was trading that let me do that. Instead of doing one full-time job 40 hours a week, now I do like 10, 15 different things for 40, 50 hours a week. But it's more, I don't have the same thing every week, so it's more fun for me. Um, this in a couple of days, we got a big thing happening in the city where I get to go and rep the city for the event on Thursday morning and then go teach a class at another corporate site after that. Then I have to go to another corporate site. So I'm always on the move doing different things. And this for me personally, this was the biggest time efficiency. It freed up my time to go do other things and not have a full-time job. Um, if anyone's interested in working with me, let me know before midnight on Easter. Um, this is the discount I usually give to people in a meetup. And all you do is email me, call me, use the form on our website and just message me letting me know you're interested in doing a training. And the discount, the prices on the website is the full prices. This is what's shown on the website. Do everything one-on-one. The details are here. The website has the details on the FAQs page. Everything one-on-one. And but these are the discounts that'll be off of these prices here for the futures. And the details for the futures are here in the handout. Um, Everything's one-on-one, and I'll meet you in person if you're near Santa Clara, or I can meet you online. And this is the details for the options program also if you want to do options. Now, I'm going to go over one of the charts real quick so you can kind of get a feel for how we actually do analysis on futures. I'm just going to do a quick example today, um, and take a look at any of the videos on my YouTube channel for the futures, and you'll see a more detailed review of P&L and everything else. I'll take a quick look at that now, but those have the detailed stuff of quite a few of those. All right. Again, if you have any questions, type it in. Um, and what city do you mean? I mean Santa Clara. So if you're near Santa Clara, then I can work with you here in person. All right. So I'm going to change this share to, okay. So this is the euro, chart of the euro. Here's where we are right now in the euro, trending down. All right. I went over this strategy a couple months ago. It's a trend line strategy. And the concept is that this is a linear regression line, okay? And we use it a lot in almost every chart, some kind of linear regression line and a moving average of the linear regression line. This is just a linear regression line, and you'll find this on every trading analysis platform, right? But the way we have it set up, we create turning points. So we show swing down then up, swing down then up. It's a great way to set up and use them in an objective way so that we create something that's repeatable. One of my biggest issues when I was learning to trade was repeatability. People would show us, well, here's a double top, but how come that's not a double top there? Oh, well, this one, but this is a double top. That's not a double top, and but they look the same, but that's not. Or we'll draw your Fibonacci here to there. Well, why not there to there? Well, why not there? Well, that's all. That subjectivity is something I couldn't deal with. That's the engineering part of me. So I had to apply my engineering mindset to the charts also and create something that I can trade with this objective. So anything you see us doing is the result of knowledge um, learning from dozens and dozens of people all around the country. This was before there was a Zoom. We had to actually go in person to see people. We had to actually go to Las Vegas or fly to Seattle or Florida to actually learn from people. There was no Zoom did not exist when we were learning to trade. So we had to actually travel and learn. Okay. So from knowledge learned, this is an upper Bollinger Band here. We'll be looking for price to make an extreme move up into the Bollinger Band, hit the Bollinger Band, come back down, and then make a swing, and a new and look for make a low. So it goes up, down, up, down. It goes up, down, up, down. There's a concept we learned in a couple of different people we've met along the way for market architecture. We also learned Gartley patterns and other things like that. Gartley patterns were great. We never had a loss on a Gartley pattern, but this is the same kind of concept, but different. But it's a wave. It makes a move up, but then it comes down, 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 and then shoots back down. So what we do, we have the turning point here. We have a turning point here. Just draw a trend line from here to there, and I look for a close below the trend lines, either here or here. Close below, that's our signal day. Confirmed. This is a squeeze indicator, confirmed with the squeeze. This is what we call our TNT 52 cell, trend line cell. Go back. Move up into the Bollinger Band. Down, up, down. Boom. There's a turning point. Here's the previous turning point. Draw the line. If the squeeze was increasing, we would be filtered out. We wouldn't do it. But if the squeeze is also decreasing, this is our confirmation. Something we learned from Jake Bernstein, trader for many, many decades. Setup, trigger, trade management. The setup is the visual. This down, this up, down, up to create this turning point and this previous turning point. That's our setup. So the visual part is easy. And the trigger is a confirmation to confirm the trade. So you got to have something that's a visual. The visual is pretty easy to identify when this happens. I'll take out the lines. I'll show you how you can tell. Okay, I'm doing an evaluation. Did we have a turning point today that went down and up? Nope. Next day, did we have a turning point? No. Next day, turning point? No. Oh, we have a turning point. So now we're on the look the next day, next day for this line to go from there to there, and we're looking for the first close below that line. The first time one day closes below that line, that's our signal day. The next day, nope, didn't close below it. Nope, didn't close below it. I'll go ahead and extend the line so you can see where it's going. Okay, this day it closed below. If we go back like so, got a turning point, next day close below. Nope, next day, yep, close below. That's our trade signal. We look on our trading plan and verify that it's over 80% wins. If it's under 80% wins, we don't deal with it. 75% wins, we make money. 80% wins, we make good money. 85% wins, we make a lot of money. And the way the trading works out, it comes out, we're looking for anywhere from a $2 to a 2 to 4 to 1 return, meaning we make $2 to $4 every one we lose. It's not risk one to make two or risk one to make four. It's make four for every one we lose. Make three for every one we lose. That's how we trade with profit objectives. And like I said, this happens all the time. Goes up, makes an turning point. So we look for the previous turning point. Bam, bam. And then we look for a close. So we're always looking for enter. We put a sell stop in here. So we enter only short if the market goes lower. We're not going to go through all the math of this today because that wasn't the goal for today. But any of the other videos and recordings for the meetups, we go through all the math, all the profit and loss and everything, how this is done. But this is how we do it. This is not just one out a group of strategies. So we trade a group of strategies, long and short, but it's very visual. So once you learn how, I send an email out every afternoon with the trades we found valid, so you can compare it to the trades you found valid. Um, and it takes a little while to get used to doing the review on your own. But once you do it for like a month on your own, it's not that hard, and it goes pretty quickly because you know how to filter just what to look for. But once you just know it to what to look for, like the V and the previous V, and there's a V here, previous V, draw the line to the closes, you have a potential trade. So seeing it is not that hard, and the detail of the trading plan. Okay. So that is how we do that. And I know there's always a question about P&L, how we actually make money. So let me go through this real quickly, and so you get a feel for the numbers, because people always have an issue with making, how do we actually make money? So I always like to show this. I had asked Becky to put together this spreadsheet a while ago so people get a feel for how money is made or lost trading the future strategies. This particular sheet is just the currency futures. We have another sheet that shows index and currency futures. So this one is just the currency futures. Then we have it broken down in currency index and both. All right, so what this is showing here is we started 2019, and I said every trade is risking $1,000. It will not be exactly $1,000. One trade, the risk might be $917. The next trade might be $952. Other one might be $1,070. Another might be $1,055. We put $1,000 here for the presentation so that you can see the math more clearly, but it's never exactly 1,000. Okay. But this gives you a feel for the percent return, and this is worst case scenario. Um, this is just first target only. So if it says 300 and you're risking 1,000, it meant it's a 30% return at the first target. If you want more, that means you have to do more work and trail stops and manage the position. Otherwise, it's 500, it means a 50% return at the first target. That's 80% or higher trades we do. Okay. And targets can be anywhere from a 30, 25, 30% up to 50 something percent at the first target only. So everything we show you is worst case scenario at the first target, all in, all out, and risking $1,000. Like I said, it's never going to be exactly $1,000, but this is for the presentation so you can understand the math and approximate percent return. So if this was January 2019, your month would have sucked. You would be hating me, and I have people who hate me all the time. I got one person hating me right now. It's like, it's going awful. I'm going to lose all my money. Oh my God. And I got that's when I have to do the coaching, because I basically coached the person down off the cliff edge, and I think I've got him off the, like, stepping back from the ledge right now. But that's what I do. Um, People at some point in time, you're gonna have trades going against you. You're gonna think you're gonna lose all your money. You're gonna everything is going into your head. No one ever complains when we have 3, 4, 5, 6 straight months of wins. No one ever complains then. But when you get like a couple of weeks of losses, everything you learned before goes out of your mind. So, but that's what I do. I have to coach people. You gotta keep trading, because that's the kiss of death right there. I'm not just gonna stop it. I'm just gonna like watch the positions. No, you have to keep booking profits, booking profit. A loss is no problem. You just keep booking profits, and all of a sudden those losses go away. I'll use this as an example. This is a sucky month. The next month you made it all back. You don't need a lot of trades to make a good living trading. This is percentage return. So this is assuming a 25 grand account, can be any size account, is about percentages, and risking $1,000 per trade. Okay. This can be $500 per trade trading currency futures. This could be $300 per trade trading currency futures. You can have smaller trades in a smaller account. That's the best thing about currency futures. You can learn small, and as you're more confident, then you add more capital to your account and trade bigger size as you feel more confident because you will have bad months. If you were the one starting in January, the first month, you're probably losing confidence in me, the system, everything. It's up to me to try to keep you to going. But if you started in February, then you know nothing but making money. But you got to understand. That's why we put this together to understand the big picture. There are bad months. That's the difference between swing trading and day trading. Day trading, you might have good days or good weeks. When we go to the bigger time frame of swing trading, you have to evaluate good months and good years. There's a difference. Day to day means nothing in swing trading. We look at good months and good years. So when we look at this, you have your good months, you got your not so good months, but when we get right down to the end of the year, um, it is what's the percent return? Let me change this a little bit here. Add a column. Okay. So 36% return, and that is risking, that's the column, annual percent return. That's what it is, the annual percent return. At the end of the year, it's a 36% return, risking 4% of the account per trade. This is 2020, one of my best years trading. I had nothing else to do. So I guess I got focused on trading. The market, remember when the market had to feel that massive drop at the beginning of the year? Take a look at this. We just got buy signal, sell signal. Didn't matter what the market's doing, what's in the news. You didn't if we didn't know there was a COVID thing going on, a shutdown, you just look at your charts and take your trade. That's why I always say, don't look at the news to try to make decisions. It will influence you negatively. Just take your trade signals. That's all this is our trade signals. And you don't remember, well, there's something happening that's making us everything works. We don't know what. It was one of the biggest sell-offs ever in a short time, one of the biggest rallies ever in a short time. And we got two losing months in October. You were down 12% for the month of October. And if you started in October, it sucked for you but if you started a couple months earlier, oh, no big deal because you made a bunch of money back then. But one bad month, and when the year is done, a 62% return just by being consistent. You will not be in every single trade. You will not be in every single trade. It won't happen. But you try to be in as many as possible to try to because the numbers count. You never know which will be the wins, which will be the losses. That's why you place every trade with the same approximate risk. It will never be exactly $1,000 exactly, but you keep that same area which describes the percentage of your account and be consistent. And that same thing every year, year after year is the same thing. You have your couple of bad months. This was like two back-to-back bad months. So if you started here, you're freaking out. Oh my goodness, there's nothing working. Next month I lose all my, and then 1 month later you make it all back. Okay, and just a handful of trades. So that's the thing. It's like that's why, like I said, I asked Becky to put this together so you have an idea what the big picture looks like, not just what's right in front of your face. So day trading, you look at everything from day to day. How did I do today? How did I do this week? Swing trading, how did I do this month? How did I do this year? Um, and by looking at the history, if it was a 2% risk per trade, just divide all numbers but by two. You're not going to go more than 4% account risk for futures because the margin would kill the account. So if you go too big, it just will wipe your account out quickly and you get a margin call. So you got to be aware of certain things like that. And I'm switch back to the handout. So that's gives you a feel for the numbers. Um, and give you a feel for the charts of how we do our analysis. It's not that hard, but it's like I said, I do it for you every day and send it out to email with all the details of what we found valid. When we hope you're doing the same thing and compare it to what we found. Some people just wait for our email. Some people do it themselves, and that's fine. We'll do that for one whole year. For one full year, we'll send that email out. And because we do everything we can do to make sure you are successful. We do whatever we can do to make sure you are successful at this. That's part of this deal here too. It give you the written trading plan, the stats, and we go. This is so key, position sizing. As long as you limit your risk, you control your risk, and risk meaning, oh, I might lose money, or risk meaning, oh, the market's, that's not risk. The risk is you determining how much you can lose on a trade and and trade sizing appropriately and putting in your targets and stop loss appropriately. That is the risk management. It is not risk of the market, is not risk of it. It's you controlling the risk, you define the parameters of your trade. You determine how much you can lose, not the market can cause you. No, you are responsible for your trade and your risk management. If someone says something is risky, what's risky? Oh, futures are risky, options are risky. Everything is risky if you don't know what you're doing. That's what's risky. Risk is what's risky is our lack of knowledge is what's the risky thing is. And we didn't know that either until later on after we lost a bunch of money, is because we just didn't know certain things. So we lost a bunch of money and learned from it and didn't do it again. Um, at least not too many times. Sometimes it takes one or two um, events to actually learn. I say minimum 6 months of guide support. We do this up to a year, and after a year, there are people who contact me 10 years later, and I'm still working with them. I don't. A lot of the people who I work with are in the Bay Area. It's like I see them, talk to them. I'm not going to say, "Well, I'm not going to talk to you. It's been too long." No, it's like you need some help with something. Email me. You need to do a quick Zoom or a quick in-person meeting. That's no problem. Just this past week alone, I was asking one of my coaching clients if he is able to help with another potential coaching client who doesn't speak English. And I told that coaching client, I'll pay him something to come out and help me. And with the translation and stuff, he's like, yeah, I won't even charge you for that. It's like, oh, if someone needs help, you help them. And he'll help with the translation, not a problem. So people help each other, okay? So I don't limit the number of months. It's like, you need help, call me, meet with me, not a problem. Because it usually just take a couple of minutes. And if that's all it takes to get you back on track with something, that's no problem. I do everything one-on-one, and I handhold people as needed. And we try to get you trading live confidently as quickly as possible. I'll meet with you in person if you're around the Bay Area, or via Zoom, since we do a lot of stuff on Zoom now. But what I found is that I might have to tell people the same thing 5 different ways, 4 different ways for them to get it. Not everyone learns everything the same way. Things I think are complicated, other people find easy. Things I think are easy, other people just like, how are you not understanding that? That's why you can't always just listen to a webinar and get it, because you might need it explained a different way for you, because that's how your brain works to take in information. So I try to find, how can I say this to make this person understand what I mean? And that might take a little effort, and knowing the person a little bit more too. It helps to know the person by working, because I've been talking with them one-on-one for hours. So I know the right words to use to get the point across, or the right attitude, or whatever it is. So everyone's different. So, and so that's the, and then options is just, it's just a few, if you're just doing options focus a little, if you're doing them both, I give you a much bigger discount. If you're doing an options program in addition to futures, then I do the 750 off if you're doing both. 750 off the combined options and futures. It just takes more time, but it's good to do both, because there are going to be times when futures are just not happening, they're not making you any money, but options are kicking. Right now, options are just kicking it in life, because the options work extremely well when there's massive volatility like we have now. The markets are taking big moves. That's when options work for us. Targets are bigger, payoffs are bigger, where when the market's going up nice and slowly, our first profit objective on options might be 10 to 20 something percent, but with the volatility on options, the first profit objective is more like 30 to 50% return on the first target. It's just a whole different world. That's why we love this volatility now we're seeing for option trades, because we get bigger returns. So there's a time and place for everything, options and futures. That's why it's good to do both. Today we're focusing on futures. In another maybe 2 or 3 weeks, we'll do another options presentation. But Let's see. I see roses there, and options today, but I enjoyed your presentation. Yeah, we'll do options in another 2 weeks, 2 or 3 weeks. We got Easter next Sunday, so then maybe another couple of weeks after that, we'll do options again. But let me know if you're interested in working with me on the futures. Let me know before Easter Sunday, and unless anyone has any questions, I'm going to put that link back into the chat window again if anyone came in late. Um, you have the link for the handouts and the couple of previous recorded meetups with the options and futures. And let me know about this soon. And or if you want to call me, is always a good thing to do. Give me a call. My phone number is at the bottom of each sheet on the handout. It's also on my website. If you haven't been to my website, I'll show you that real quickly here. Do the share real quick. I know some people, I always think go to the website, but turns out they didn't. So here's the website, and here's the historical wins and losses on the front page of the website is something, my bio and my background. Some, if you get a chance, watch this podcast that was where I was a guest. I wasn't sure if they were going to like going to ambush me or what. They just told me, "Hey," I'm like, "Okay." So it was a good podcast where they just asked me whatever, and I asked them what, and I just honest answers. So this is me unfiltered and live. A few other links to some of the previous um, webinars or meetups we did, futures and options on the front page. And this was an interesting one I did. This was 2020. This was 2020. One person I met and wanted coaching me, wanted me to coach them, but they only wanted to trade a NASDAQ and nothing else. They just want to trade NASDAQ. They weren't really interested in all. I told them, well, what about all the other sectors and everything else? Because we trade 20 something sectors. They're like, man, no, it's just NASDAQ. So just out of curiosity, I put every trade on the NASDAQ that year onto one chart. Every trade long and short on the daily charts and weekly charts. And it was 41 trades and 3 losses. But it was a good exercise just to do this, um, to see, because this first time I'd done it, I was like, do we have enough trades to just trade one thing? And if you're trading bigger position sizes and all you're doing is trading one thing, as long as you're consistent with your trading, even you're just buying calls and puts, time decay is really a non-issue, because the wins will offset the losses, even small losses from time decay. So it was a good exercise in this. And on my other page, I said I put all the detailed stuff on the FAQs page. I mean, real detailed stuff for each of the programs. So you can feel free to go through where I put much more detail for each of the trading plans or in, and each of the trading programs are on the FAQs page, and schedule a coaching program. So these are the same programs summarized here. So, let's switch back to the, like I said, if you want the pricing, you have to message me, and you can use it. You can even use the contact form to message me or email me or call me or text me. It all works just fine. Here's a form here you can message me on. So I'll change back to the share, but just let me know if you have any questions, want to chat. Is any, even if you don't want to, you just need information, um, get some thoughts on anything, go over what your goals are, because sometimes there are people who have called me, I've just given them guidance on how to get to their goals. They didn't become coaching clients, but just guidance, to point them a certain direction. So let me know. If unless we have any questions, we'll resume in about 2 to 3 weeks with our next options training. And then, but in the meantime, have a good Easter, have a good couple of weeks, and any questions, call me, email me, message me. I'm very reachable. Um, See you all in a couple of weeks then.